It's Friday, November 1st, 2024. Thank you so much for joining me today. An absolutely beautiful day, about 80 degrees, crystal blue skies. The course has been reseeded, beautiful green. The birds are out, tortoises are running around here, nuggets running around somewhere. We got a lot to talk about today. Before we do, please make sure to like, share, and subscribe. A lot of news here. I want to talk about the job numbers. I want to talk about the markets today. You know, it still really blows me away how many people make these videos and literally think it's a joke, laugh, giggle. They almost think all of this is very, very funny. And a lot of people will criticize me because I don't laugh, I don't joke around. When I read stuff like this, when I follow what is happening to people's lives, what is happening to the U.S. economy, I'm extremely concerned. And I have 15 to 20 minutes a day to share with you the news, my thoughts. And I think it's a really, really serious time in our history. I don't think there's anything funny about it. I'm sorry. I don't laugh much or joke around or giggle. I just find this extremely dangerous. It's extremely concerning. It's affecting millions of people now. And I think people better really start taking this seriously because we are heading into what I believe is going to be the worst depression in world history. Dow closes nearly 300 points higher to begin November as investors shake off weak jobs report. How could we not see a stock market collapse today on the job numbers that we received? The numbers were absolutely horrific. This is just another reminder to everybody out there watching this just how fake the markets are, how manipulated they are, how propped up they are, how controlled they are. Because in a free market, we would have seen the stock market today absolutely obliterated. It would have collapsed on the news that we got today, and it should have collapsed. But apparently it's not going to collapse because all the market cares about is what the Fed is going to do at the next meeting. And they know that we're going to get another 25 basis point rate cut, which is not going to help you one iota. Might help them a little bit. The positive news might help them. But how in the world could the markets not collapse today on this? U.S. economy added just 12,000 jobs in October, impacted by hurricanes and Boeing strike. Now, I'm sure that had something to do with it. But 12,000 jobs? Really? I think that there's a little bit more to this than meets the eye. August was revised by 81,000 jobs. The hedge today, job shock. October payrolls, huge miss as private jobs go negative for first time since 2020. Private payrolls were down 28,000, down from the 223 pre-revision last month, the first negative print, as I said, since 2020, December 2020. August was revised down 81,000 from 159 to 78,000. September was revised down by 31,000 from 254 to 223,000 jobs. So month after month, every month is revised down. So we can blame it on hurricanes, we can blame it on the Boeing strike, or when are we going to face the music here and start blaming it on this economy that is in shambles? The hedge today, the article is titled An Ugly Report. Of the 121,000 jobs created, all the jobs were in the public sector, meaning government jobs. Now, I'm sure the hurricanes had an impact, but why didn't the hurricanes affect the ADP report, which came in at 233,000 jobs with upward revisions to the prior month? I don't know. So let's take a look where the jobs are, and please feel free to comment down below. I think that the jobs report was probably even worse than they're telling us. How could it be even worse than this? I don't know, but apparently I think it could be a lot worse, probably negative. So CNBC is telling us in this chart where the jobs are. I won't go over all of it, but I'll give you the majority here. Healthcare and social assistance added 51.3 thousand jobs in October. Most of those are government jobs. The government added 40,000 jobs. Wholesale trade added 10.4 thousand, and construction added 8,000. 8,000 jobs. added in construction. But healthcare, social assistance, and government added over 91,000 jobs. But this is where it turns. Manufacturing, we lost 46,000 manufacturing jobs last month. Professional business services, we lost 47,000 of those jobs last month. This is way beyond an ugly report. This is a horrific report, ladies and gentlemen, a scary report. People are losing jobs left and right. But look at what's being added. Government jobs. Do we need more government jobs? Ask yourself this. Who's paying for the government jobs? You are. You're paying for these jobs. Wendy's to close 140 restaurants by the end of the year. They just opened up 500 new restaurants in the last 2 years, now closing 140. The one by my house, I won't even go to it. I find it extremely dirty. A couple in this area that I've been to over the years, I would never go back to because they're just dirty. And just the price you pay now to go to a Wendy's is absolutely ridiculous. So I think they're going to be closing more stores. They're going to be closing more stores globally. I believe up to 300. But 140 restaurants closed by the end of the year. Question is, how many are going to close in 2025? Here's another one. Nissan cutting production of U.S. models by 30%, putting 2024 global sales target at risk. Another sign, ladies and gentlemen, that the consumer is tapped. They are out of money. When we were in, not Vegas, but Texas and other parts of the country last week as we were traveling through the Deep South, I could not believe the amount of vehicles on the lots. It is just unbelievable. I've never seen so many cars, trucks, and SUVs on the auto lots. And these lots out there in Texas especially are so big and having so many cars. I just don't know how they're going to sell them. Nissan is forecasting a 99% drop in quarterly operating profit, set to hit 995 million yen. That's $6.52 million. And a 12% decline to 500 billion yen for the year. Unbelievable. Again, the car lots are full. What I didn't see a whole lot of, I saw a lot of cars, a lot of SUVs, a lot of trucks. I didn't see a whole lot of people on the lots when we were driving through multiple states in the United States of America here. I did not see a lot of people out there kicking tires. I don't know what they're going to do here. So what we're going to see is we're going to see more automakers cut production. And when they cut production, guess what? They start cutting jobs. As you know, Stellantis, Dodge, Chrysler in big trouble. And the Dodge Chrysler lots are full of Chargers, Challengers, and pickup trucks. What are they going to do with all these vehicles? They're going to have to slow production down because they cannot sell what they have right now. And as they slow production, they start closing plants. They start laying off. Supermarket trends. Pocketbook pressure increases chicken demand as consumers seek savings. It says here, cash-strapped consumers have traded down to budget grocery stores and cheaper private labels. They've also dialed back on restaurant spending as challenging economic conditions persist. I would have to agree that a lot of people I know, they're not going out to eat as much as they once did, me included. I took your advice. I'm eating most of my meals at home. Every once in a while, especially when we're on the road, I will grab something to eat. But 90% of my meals now are right here at home. Breakfast, lunch, and dinner. It's better. It's more affordable. It's fresher. It's healthier. And it's more consistent. So I'm doing it at home, as many of you recommended. And I know that a lot of you are doing the same thing. But you just feel like when you go out now that you're getting terrible service, food quality horrible, portions less. It's just not the fun experience, especially when you would go to a nice restaurant. It's just not the fun experience as it once was. I will say when we were in the Deep South, most places were phenomenal. The food was great. The portions were good. The service was phenomenal. Prices have gone up, though. But I would say out here, at least in California, that you're not getting the same thing as you are in the South. We have many people in this country plagued with massive credit card debt. They can no longer afford to go to a restaurant. They can no longer afford to go to the grocery store and buy what they want to buy. They're buying the essentials. They are buying cheaper types of food. They're cutting out steak. They're going to chicken. They've been doing this for quite a while now. But as the credit card bills are racking up, as the savings has been completely drained, and many people now are completely self-reliant on credit cards, they've got to make the cards last. They're paying the bare minimums, and they're going to have to eat cheaper food, maybe even less food. Many people are cutting out meals out of the day now. So they might be skipping lunch and just having breakfast and dinner, or they're skipping 2 meals and just having dinner. We're in a whole nother world, ladies and gentlemen, and we're not going back to normal anytime soon. So chicken is winning the affordability game here at the grocery store. But yes, you're seeing more people shopping at discount stores, discount grocery stores. They're cutting out the steak and the meats, and they're going to chicken. I'll tell you, if you're eating high quality meat, high quality seafood, you've got to be making a healthy income to do it, because it is getting absolutely ridiculous, the costs. U.S. manufacturing survey hits 16-month lows, but prices paid spiked in October. Fourth straight month of contraction. We saw sub -50 for the manufacturing PMI. The Fed will cut 25 basis points next week because of jobs. And they're going to ignore prices paid and core PCE. So they have not conquered inflation, not even close. But now they're going to continue to cut because of the job crisis we're seeing, the layoffs. Yet inflation has not been put under control. Inflation has not been beat. So I personally believe that they started cutting rates way too soon. I think they should have been much more aggressive with this, and they were not. And they are now cutting rates when they should be hiking rates. So again, I think they should have been raising much more aggressively. I think they should have left rates higher for longer, and they're doing the opposite. Now they're cutting rates, and they're going to start printing more money because they have no other strategy, no other plan, no other magic tricks to now beat inflation. We did not get to 2%, and we're cutting rates because of the job crisis. Say hello to stagflation, ladies and gentlemen. It is right around the corner. Here's another one today from CNBC. Record numbers of wealthy Americans are making plans to leave the U.S. after the election. Why are they doing this? Well, they fear political and social unrest no matter who wins. No matter who wins, wealthy Americans are getting out of here because they believe that we're going to see political and social unrest. What are your thoughts on this? Please comment down below. Here's one from The Hedge today. Watch. DC begins boarding up ahead of election over social unrest fears. So I was watching some of the videos, some of the pictures here. Looks like a hurricane is coming to Washington, D.C. So why are these buildings being boarded up? Why are the store owners boarding up these buildings? What do they think is going to happen? What are they afraid of? And who would be rioting after the election? Think about what group of people is going to riot after the election. So they're expecting trouble. And I think that this probably means that you probably have a good idea that Mr. T is probably going to win the election. And so they're expecting some big problems in Washington, D.C. Got a chopper coming over here. Let this guy fly over. Looks like Highway Patrol. I'm going to finish with this last article, also from CNBC. Despite half-point rate cut, the average credit card interest rate fell by just, get this, 0.13%, report finds. So we got the jumbo 50 basis point cut at the last meeting. Now we're going to get a 25 basis point cut. So none of this is helping the average American. This certainly isn't helping anybody with credit card debt. But think about that, 50 basis point rate cut, and you got 0.3% decrease in your credit card APR. That's unbelievable. And now a 25 basis point cut coming. So it's literally not even going to move the needle here. The consumer is literally being strangled by these high interest rates. And it doesn't really matter. The Fed could put rates down to 3-4%. Guess what? Your credit card rate is still going to be over 20%. Isn't it amazing that The banks never passed the savings on to you. When rates were nearly zero, people were still paying 15, 16, 17% on their credit cards. The savings never gets passed on to you. So don't get ready for any relief, ladies and gentlemen. It's not coming. Nobody's coming to save you. They're going to continue to strangle the consumer. This is an absolute joke. The top 1% are going to get all the benefit here with the rate cuts. You're not. This is going to continue to cause more inflation. Now we're going to see stagflation, and people are getting absolutely no relief on their credit cards. We're not seeing mortgage rates going down. We're not seeing rates go down if you want to buy a new or used car. It is ridiculous what you have to pay now to finance a car, what you're paying on your credit card. You're paying over 7% on an overpriced house, and you're paying 12, 14% to go buy a car, an overpriced car, which has had the last couple of years, we've seen nothing but recalls and trouble with the cars, the trucks. The quality of the vehicles over the last few years, absolute trash. You're paying more for garbage. You're financing these vehicles and having to pay more interest. The American consumer is in very, very big trouble because you are being strangled. So I'm going to leave it there today. Nothing funny. I have no jokes. I'm not going to giggle like so many people think this is a big joke. There is nothing funny going on here, ladies and gentlemen. I'm very, very concerned about what's going to happen after this election. I'm concerned about what's going to happen to this economy. I'm concerned what's happening to the average American, the average household and family. Big, big trouble. And I'm concerned that, we're seeing buildings boarded up right now because some type of unrest is coming. So be prepared for that. But if you think 2025 is going to be a cakewalk, you got another thing coming. Put the Kool-Aid down and wake up. Smell the coffee, ladies and gentlemen. Big trouble is coming. And there's nothing funny here. There's nothing to laugh about. And as I've said in the beginning of this video, I take this extremely seriously. When I sit down, talk 15, 20 minutes with all of you, it is a very, very serious talk. I'm extremely concerned, and I know most of you are too. You don't have time for, games. You don't have time for jokes. You need to strategize now. You need to be multidimensional on how you're going to prepare for what's coming. This economy has got a long way down to go. What we're going to see politically, socially, is going to be absolutely chaotic in the next 12 months, I believe. You're going to live through a depression, a Great Depression, that I believe is going to rival the one that our grandparents lived through in the 1930s. So be prepared for that. I do believe we're going to see some big, big trouble here. How could we not? The debts and deficits are past the point of no return. Get ready, ladies and gentlemen. Please pray for America. I think the best thing we can all do right now is pray over this election, pray for this country, and pray for peace around the world. Stay safe. God bless every one of you. Again, thanks for tuning in. Please like, share, and subscribe. As always, I look forward to speaking to each and every one of you. Take care.